Welcome to Agency Elevated Podcast. This is John and Jeanette Lucero, your hosts for this podcast, where we educate and inform the masses on everything life insurance. If you've been looking for a place to get your education and become better informed about everything life insurance, you are at the right place. As well, we are building a massive team of licensed insurance agents to build the fastest growing life insurance agency in the nation. If you've been looking for a team to join, you are at the right place. Now sit back and enjoy today's episode. Welcome back to Agency Elevated Podcast. Thank you for being with us today as we discuss a topic that is near and dear to me and something that a lot of people have asked me about for many, many years, and that is the difference between term insurance and permanent life insurance. And so what we're going to do today is just have a conversation, Jeanette and I, about the differences between term insurance and permanent insurance so that everybody listening today will have a better understanding.
I want to just share too, and welcome you guys. Thank you for being here. What evoked this conversation, aside from wanting to inform and educate within the masses on this information, but we were transferring our policy over, and we had money within that policy.
Yeah, cash value.
Cash value. Thank you. Bear with me, audience, please, because even though I've been in this environment for 22 years, it's not something that has been easily absorbed within my brain. So I do struggle to remember some of this terminology. So John's going to have to correct me quite often. But when it comes to us transferring over this policy and we had cash value in this policy, I knew because we had talked about it that we had cash value growing, but I didn't understand exactly how this all worked. And now I'm starting to really understand this. So I'm like, wow, we need to talk about this because, man, if like you're the expert, it's easy for you to know this information. But for somebody like me who needs and wants life insurance, and my friends and my family members, we need and want life insurance, we don't know how this really works. So can you explain, we're going to talk about the difference between term and permanent. I cannot remember these terms. So term, let's start with term.
Yeah. So term is probably the easiest to understand, is probably what most everybody has out there. And term is, if you just think about the name, it's for a certain term. So it lasts for a certain amount of time. So you can buy term insurance. There's some carriers out there that will do as short as a 5-year term, 10-year term, you have 20-year terms, and I've seen some as high as 35-year terms.
Is there an average in term that people typically start with?
Average that most people look at is a 20-year term. That's pretty standard.
Do people's companies usually supply a standard time frame in term?
Yeah, so typically if you have any type of life insurance through group benefits, through your work, it's usually term insurance. It's very, very affordable through work. In fact, that's probably another completely different podcast. And I always tell everybody, take advantage of what you have through work. It's usually the most affordable, but how many people are going to actually stay at their job the rest of their career and never change? That's highly unlikely.
And what is the term of that policy within the company, right?
Yeah. And a lot of times if you leave your company, you leave that insurance. And
right.
So if you change jobs,
you paid into it. Wow.
You have a gap in coverage. And so a lot of times we see that happen where somebody changes from jobs, they have a gap in coverage, but yet they use term insurance more often than not to fund those group benefits. But to quite simply understand what term insurance is and to make it really understandable for the average person out there, it's not hard to understand. If you just think of term as lasting a certain amount of time, a certain term length, that's what term insurance is. And it tends to be what most people think it is actually the most affordable. I actually will share today that people think it is the most affordable.
Did you say it is the most affordable?
People think it is the most affordable.
They think it is.
But when we talk about permanent here in a few minutes, you'll understand the differences and where permanent can actually be more affordable long-term.
Okay, so is there a demographic that is probably the most well-rounded for term? Or how do you determine this? I mean, I know this is something that you do when you get together with a person that is shopping around or interested in getting a quote. I know that you do that when you're with them in person, but I'm just trying to think from this podcast, how can we share, a little bit of information on how somebody can decide this or even look into it?
Yeah, absolutely. So one of the things that I do with every single person I meet with, not only with the clients or the prospects that I work with, but also in training and developing my agents, is we do a needs analysis. And we really need to understand, what are you trying to take care of with your life insurance? And those needs can be different for every single person. We use a simple idea, we call it DIME as an acronym. And really it's the 4 main things that people need to cover. It's death, What's going to happen at your final death? What do you need to
The
cover?
final
The
expenses.
final expenses. Then we use I in that acronym to really stand for income. Is there an income that you need to replace? So if something was to happen to me tomorrow and I don't come home, how does Jeanette replace my income?
Which was one of the biggest reasons why we really dove into life insurance on you, is to help protect me, because you have the ability to make a substantially higher income than me. Okay, that's I.
So that's I in the acronym. M is for mortgage. How many people out there actually have a mortgage? And for a mortgage, if something was to happen to me or whoever's listening to this, they have a mortgage and they say, well, I'm the income earner. I help pay the mortgage in my family. If they're no longer here, how does that mortgage get paid? Do you have to sell your house? No, you can.
And if it doesn't get paid, then somebody's liable to have to pay for the mortgage, or they have to move out, which would be absolutely horrible.
Or sell their property. And some different options.
Right,
there.
move out, yeah.
So the M in that acronym stands for mortgage. And then finally, E is for education. And for a lot of people, think about, what do I want to do for my kids? If something happens for my kids and they want to go to college, how do I set aside funds so they can still have their education taken care of for them?
I think the average college degree, a bachelor's degree, is something like over $100 and something thousand these days.
In-state programs now are well over $100,000 by the time you take care of room and board,
That's
tuition.
In-state. Yeah. What about out-of-state?
Yeah, out-of-state and private, you could be way off the charts.
Okay, so let's go back. Term insurance is for a specific term. Could be, what's the minimum? You said 5 years? Some will do 5 years. Some companies will.
I've seen some carriers that have access to 5-year terms. I've seen some carriers that have access to up to 35 years.
Okay, so anywhere from 5 to 35 years. And we decide that?
That is something you can decide with your agent when you first set up your policy.
Okay. And I mean, that could be dependent on like how old we are. Gosh,
there's so many factors that come into play.
Yeah.
And what I always tell people is you go back to looking at the needs analysis, and easy way to think about it, your D in that formula was death. That's never going away. You're going to have final expenses no matter what. So that's something that's probably more of a permanent need. And we'll talk about permanent insurance. Your income will always have to be replaced. So it's also a permanent need.
Okay.
But you could have a mortgage, and maybe your mortgage is a 20-year or 30-year mortgage. Well, that's where you might say, okay, all I need is a 20 or 30-year term to make sure my mortgage is taken care of. Or for education.
Got it. Okay.
Education's another one. Your kids
How old are they?
Yeah, if they're 5 years old, 13 years from now, they're going to go to college, but they'll be done in 4 years. So maybe 17 years from now, you won't need those funds.
And then you can reevaluate it when that term comes up?
Yeah, you can you can purchase something just to allocate for that specific term and that specific need. That's why term insurance is so important.
So I want to go back through this. Term is anywhere between, it's a length of the policy, of the life insurance policy. It's anywhere from 5 to 35 years. God, I'm getting educated today big time. This is stuff I did not know. It's getting anchored in. It's cool. And I hope it is for our audience members as well. And then to do the risk analysis, a lot of you guys and what you train your agents to do on our team is to follow the DIME acronym, which is D. Let's go through this really quick. D is what?
Death.
I is
income.
M is mortgage. E is education.
E is education. Okay. And that's just a really simple one. There's lots more out there. I can train on all kinds of different ones, and I have in the past. But oftentimes what you make simple, people can understand, and it makes it easy for them to really say, okay, this is where my needs are at.
Right. I mean, why complicate it in the beginning, especially when you're just getting started into this?
Yes, for sure.
I imagine that would make, if I'm a customer, that would make my head spin. But if we did something as simple as this, I could follow that. I could follow that here today. Okay. And then now we're going to talk about permanent. These terms, I swear. Permanent insurance. So what is permanent insurance?
Okay. So just like term, we said term stands for a term, length of term. Permanent is something that will be there for your entire life, as long as your premiums are paid.
As long as your premiums are paid, which is like a really important statement to make.
Yeah. And again, when you think about permanent, there's a lot of different ways to think about it. But when you buy permanent insurance, if you buy it younger in age, it actually tends to be less expensive. The reason why is because you're locking in a price at a lower age that lasts for the rest of your life. Let's say, for example, that Jeanette, and we go back to talk about term insurance, and she gets her term policy at age 25, and we get her a 30-year term length. And it lasts her to age 55. Well, more than likely, she's going to live past age 55. At that point, she either has to see if she can qualify for another term insurance at those current rates, or see what other policies may be available for her. And so it may be more, and it oftentimes will be more affordable to get permanent earlier in life, or what we try and develop with all of our clients is to have a blend of term and permanent insurance.
Which is what we have.
Yep.
Okay.
And so, but permanent insurance is exactly what it means. It's permanent. It lasts till the end of your death. It's designed to be there till your final passing, as long as the premiums are paid. But the big benefit in permanent insurance is you have the ability to build what's called cash value. That is money that accumulates within your account for life insurance, where you can actually borrow against it. You can take loans from it.
Where does it come from?
So when you think about permanent insurance, when you pay your premium, let's just say your premium is $100 a month. There is a set amount of that premium that is your cost of actual
Do you know
life
what
insurance.
that set amount is ahead of time? Like, is it already allocated that it's like, let's say, for example, 3% of that $100 is going to go to...
So any professional agents that are out there, someone like myself or people that I develop, they do illustrations. They show you exactly what your cost of insurance is, what's getting invested into your cash value. So you know that on an illustrative purposes. And it'll show you what your actual cost of insurance is. Now, your cost of insurance goes up as you get older. So the younger you are, your cost of insurance is less, which means more of that premium is going in to pay for cash value and to accumulate more assets for you.
Wow. Which is, again, why it's important to start young. Okay, so let me think about what are some of the questions that I have. The premium. Talk to me a little bit about the premium and how does that adjust and change? Let's say, for example, let's start with somebody that's 25 and they're going to look into permanent insurance and they're going to go ahead and purchase a policy. Which, first of all, how do you decide the amount? Do you still go off of the DIME acronym? I mean...
Well, and any good professional insurance person out there that's working with you should help you with the needs analysis. Because
and you train our team to help people with a need analysis.
Most definitely. That's something
based off of like the simple foundation of it is based off of DIME, but then you guys have further assessments that you can take.
Absolutely.
In, right?
We can go in deeper as much as we need to, but what we found is that most people we work with, most prospects or clients that we work with, they've never been even given a needs analysis. Somebody just gives them the amount, says, hey, you probably need $250,000.
Especially if it's through work.
Yep. And so how do you even know if that's what you need?
Right.
And so every individual person has a different need. And of course, every single person has a different budget. But what's most important for us as professionals to figure out what is the need first, and then how much of that need can we meet with the budget they can afford? Mm-hmm. And that's where the premium comes into play. We're going to always try and meet as much need as possible with the budget that they can afford so they can keep that policy in force. Mm-hmm.
Which both have to be taken into consideration. Okay, so let's say we have somebody that's 25 years old. I'm thinking of our daughter who's 23. So let's use Samantha, our oldest daughter, who's 23 right now. Let's say she's going to look into a permanent life insurance policy over a term. How does she figure? Okay, so you use the DIME analysis. She's already done with some of her education. She doesn't necessarily have a mortgage. I'm going backwards on the DIME. And then the I is the income. So she doesn't have like a super substantial amount of income. She's 23, just graduated out of college not long ago. And then death, other than the death expenses, like, what, $20,000, something like that for that.
Yeah.
How would we, and of course I say we because we're her parents, we want to kind of help advise her, but how would she be advised or help guided in this situation?
Yeah. Well, so when I look at that specific audience, really the 20-year-olds, mid-20s, people are getting out of college, maybe they don't have a family yet, maybe they're not married. They are probably the most ideal people to get life insurance now. It's the most affordable. It's the healthiest they're probably going to ever be in their lifetime. And so part of what the planning comes into is you have to ask some more in-depth questions. Do you plan on getting married someday? Do you plan on working full-time? Do you plan on having kids? How many kids do you plan on having? Because they're pre-planning for what the future might look like, but locking in better rates with their health and their age today. And so that's where a lot of that age group says, well, nobody's relying on my income. And that's true. Maybe nobody's relying on your income today, but what does your future look like? Do you have kids that are going to be relying on you? Do you have a spouse or a partner that's going to be relying on you? Are you planning on getting a home in the future? So those are the conversations that us as professional insurance agents have with our clients to help them kind of future map what they want to get accomplished.
Okay, let's play a scenario that she decides through the help of this assessment and through you, the professional, the agent, to get 100. Give me some numbers. Like, what is she, like $100,000 and it's like $50 a month or something? Give me some numbers. I want to give a real scenario for people to really play off of.
Yeah. So I actually can tell you, because we're working on reevaluating hers right now. She's going to have another $50,000 policy. And that was something just to help her get started. And it's roughly about $37 a month. It's okay. A permanent plan. It's building cash value for her. But one thing I really want to touch on, and for especially for those of you that are listening right now, it's important to understand this because most people don't realize this. People think they buy life insurance and it's a one-time transaction. It's actually been studied. There's actually an organization out there called LIMRA. They're a life insurance organization that does studies on the consumers. The average consumer actually will purchase life insurance 7 times at least throughout their life. So for me, when I work with any of my clients and I help them with either term or permanent or a blend of it, I know that there's a high likelihood they're going to purchase another 6 times throughout their lifetime, and I'm going to be there to assist in that. So the most important, and what I tell people, the best policy that you can have is the one that's enforced when you die. So some
so
coverage.
Don't sweat too much on the first policy.
Yeah, because
like obviously go through some of the assessment, but don't stress about it.
Yeah, getting something in place is number one priority.
I really want that to land. Getting something in place is just the number one priority. Just getting that ball rolling is kind of how I hear it.
Absolutely. Okay. And then part of what you want to look at is, how do I have a review process in place, either with my agent, whoever I purchase it through, so that I know as life changes happen. If you're working with a professional that's touching base with you maybe at least once a year, you can share, hey, I've had a new child. We bought a new home. We bought some new cars. We have new assets. And something in my risk analysis has now changed. So now we need to reevaluate it. The other thing that we can talk about, which is really a great feature that most term insurance companies have, most every carrier that I represent has this as a feature, you can purchase term insurance and you can convert that into a permanent policy. Prime example I will give, years ago, it's been over 20 years ago, I insured one of my manager's wife. I pressured him to get life insurance because I knew it was important. She qualified for term insurance. She qualified at the ultra platinum levels, the best you can get, the highest.
Which is based off of her health.
Based off of her health. So she got a very good rating, the best rating you possibly could get. She got life insurance. Lo and behold, less than a year later, she gets diagnosed with breast cancer. Because of the type of breast cancer she had, she is no longer insurable. It's very hard to find a company that can insure her.
It was an aggressive.
Yes. Mm-hmm. And so what happened there, because of that, she had a term policy in place. We were able to convert that into a permanent plan. So again, permanent meaning it's here for the rest of her life. Doesn't have to worry about when the term runs out. And she qualified.
As long as that premium is paid.
Yep. And she qualified based on her initial underwriting assessment. So she got the platinum level at that current age, and she has a permanent plan. And she's still to this day very grateful that she had that. Wow. So again, that goes back to what I'm saying, that getting something in place is the number one priority.
Wow. Okay. And then, that is really, really helpful. And what happens if somebody, and talk to me about the premium, because I imagine when you say permanent is forever as long as the premium's paid, if you get a $37 premium, it's not going to say $37 for the rest of your life. So how does it adjust and change? Yeah.
So again, when you think about permanent, your pricing is actually fixed. And so you get a price, that price is fixed for the rest of the
But is the premium, if the premium itself, the actual amount being paid into the policy through premium, if that is what is decided on the cash value that's growing, that's what's part of that is being put into the cash value, correct?
That's correct.
So is that always good? Like, let's say Samantha, our daughter, keeps that same $50,000 policy and doesn't have it reassessed for like 10 years, which is cool because she's still keeping a policy. So she's having something paid into, she'll have some cash value, and then it builds interest, right? I mean, it compounds in some way, right?
Yeah.
So, that would be cool. She still had that and she kept it. She'd have a policy 10 years later, but it would have been more beneficial for her to have that reassessed, let's say every year to 2 years or something, so that she could. Right? Can you kind of explain that a little bit?
Yeah, so with any type of policy, I don't care if it's a term insurance, if it's permanent insurance, you should always reassess, because you're reassessing a couple of different things. What's changed in your risk? What now do you have exposed that you need to protect?
Risk going back to the dime.
Yep. Just as a highlight level, those are the main primary. But if you have new kids, that's going to change your risk. If you have a new home, maybe you've changed job, you're now making a higher income. And of course, we all know we live in America. As our incomes increase, our lifestyles change and they increase alongside of it. So maybe there's a higher need to replace an income. So these things will change throughout your life. So having an assessment at least every 1 or 2 years, maybe that policy still makes sense. In permanent insurance, you have the ability, depending on the products, and there's many different products out there, a professional can help you with this, is that you can always adjust your premium up if you want to build more cash value. Some products you can actually adjust the death benefit.
That's what I'm wondering.
And there's all those benefits. That's the benefit when you look at permanent insurance. Term insurance, it is set for a set amount of term. The premium is set. It cannot be adjusted. What will happen to you is, let's say, for example, we go back to that 25-year-old that buys the 20-year term. If they never reassess it, they wait till age 45, that 20-year term ends, it actually doesn't really end. What happens is most companies will put you on what's called an annual renewable term now. your premiums will skyrocket because they're now going to have a term that renews every single year at your current age. So at age 45, it goes up. Age 46, it goes up.
Wow.
And so it's why it's important to reassess this. If you're 10 years in, you say, hey, my risk has changed. You can write a new 20-year policy and replace that one. So there's some options there.
And let's say at that 20-year mark, when somebody, their 20-year term comes to what you would consider like expiration, you said it actually doesn't expire. And if they had any type of major health issues, cancer, heart attacks, heart disease, or anything like that in that 20-year time frame, and it comes up for, what did you call it again?
It's usually called annual renewable term.
Annual renewable term. Is it up to the company at that time to decide if they want to offer that? Can they look at your health record and decide if they want to offer that?
So most carriers, it's built in that automatically will go based on your age, and they won't reassess any medical. But there is carriers out there, and you have to be careful when you're shopping, that don't offer that. Some plaplaces, when the term ends, you have no more coverage.
Which again, and the reason I bring this up is because I think about somebody, I think it was my mom. I can't remember, somewhere in my family, I remember this conversation coming up where their policy was coming to an end, their term policy was coming to an end, but they did have health issues during that time frame. And when it got reassessed, the premium skyrocketed, but they kept it because their options were, that was their best option to be able to keep life insurance. So it was still worth it for them, even though it skyrocketed like several $100s more or something crazy, Okay, so now back to Samantha. Let's say she reassesses it in like every year. Let's hope that she does it every year to 2 years. So, because obviously, like you said, we live in the United States where we're constantly evolving and growing, most people. So your lifestyle does change. If she gets to like a 5-year mark and let's just say there's like not a ton of change, you're saying she can reassess things to change her premium dollars so that she's actually building more cash value? What do you mean?
So depending on the product you have, there's some different products out there that fall under the umbrella of permanent insurance. You have things like whole life insurance. Those are not as adjustable. You have universal life. That's a lot more adjustable, not only in your premium, but sometimes in your death benefit. And so some different features out there within permanent policies. Regardless, they're designed to last for your entire lifetime. But she can reassess and say, is there a feature where she can increase her death benefit, or maybe she can increase her premiums to cause that policy to develop more cash value. Build
more cash value.
And so there's some different IRS guidelines around this. This would be a very in-depth podcast to go in depth about that. Mm-hmm. But you have certain IRS guidelines. The IRS will only allow you to put a certain amount of premium.
Kind of like an IRA.
Yeah. There's some certain limits in there. And the reason why, because of current legislation in 2023, you can actually borrow against your life insurance tax-free. You could take loans against your retirement tax from your life insurance, use it for retirement if you choose, tax-free. And so those are some benefits, but because of the tax-free features there, they're going to put some limits on the amount of money you can put in.
Okay.
So like I said, I'm very knowledgeable in this as a professional. The agents I develop, we are very knowledgeable, so we can help clients understand, how do I do this? That's something you and I do. We max fund our policies to build cash value as a supplement to our retirement in the future.
I personally love this. Feels like it does feel like I could just kind of let you help lead the way as the professional, as the agent that has the education behind this. I just answer questions. You could sort of help lead the way. And that would be great for some people. Maybe they would really prefer that. Like, can you just help me get the best policy? I trust this, this information, this guidance. But then I really feel like it's cool because a lot of this causes you to be proactive. Like, I feel like if I was Samantha, our daughter, and I was going to go and get an insurance policy, a permanent term policy, I would have to really understand a lot of this and be proactive. So I personally love that. Okay, so again, term is for a certain length of time. Permanent is forever, as long as that premium is being paid.
Absolutely.
Okay, cool. Is there anything else that you want to mention that you feel like
I think as we're going through this conversation, I'm just sitting here listening to, and I don't know how long we're into this podcast, probably 15, 20 minutes, maybe it's even longer. But as we're going through this podcast, I'm thinking
23 minutes.
Okay, so 23 minutes, and I'm thinking about just how lengthy this conversation is. And it reminds me, especially for our audience, whoever's out there in the masses, whoever this is listening to this is part of the reason that I'm so passionate about life insurance. And for my team, we're so passionate about it. these questions are not being answered when you go online and try and find this information.
No.
Nobody's going to explain to you the differences in the policies, what they can do for you, and to help you really have a true needs analysis. And I will challenge all of our listeners who are listening right now, if you have life insurance, who determined the amount? How was that amount determined? More than likely, you worked with somebody who just gave you an amount and they never knew what it was meant to, versus having a needs analysis to say, okay, this is what my need is today. We know that need will change in the future, but we try and match our sales to the needs analysis that meets Jeanette, meets John, whoever we're working with. And if we can do that with a mix of term and permanent insurance, even better, to meet the budget that we know can be in place.
Yeah.
Because I always say the best life insurance policy is the one that's enforced when it needs to be paid.
Mm-hmm.
So if you get a policy and you can't continue to make the payments, that's really not the right policy for you. You got to get a policy that you can afford to know you can keep it enforced.
Adjusting it. That's a really good point. Yeah. And I feel like, as you age and as your lifestyle continues to, I guess you could say elevate, it feels like it's more of a portfolio. Like your insurance becomes more of a portfolio, not just like one single policy, because obviously we have things like people have their auto that they got to think about. They have, like health insurance, like there's all these other insurances. But when it comes to having your life insurance assessed, even if you end up keeping that policy and you don't do any changes to it, I personally think you have nothing to lose than having somebody just look at it and help you just gauge where are you at. Is this a suitable policy for you? Do you need to make adjustments? Like I said, even if people keep their same policy that they have in force right now, maybe it's with their company, or maybe it's their employer, or maybe it's through another company. To me, you have nothing to lose than have somebody look it over. So is that something that you and the team can do for people?
Absolutely.
John, seriously, I want people to understand this. Even if they just want to have it looked at and they make no changes whatsoever. Yeah. Can we do this?
We can absolutely do that. Myself, all of my team could do that. In fact, we have a fiduciary responsibility to do that for all of our clients.
Thank you.
It's actually something that we are licensed. I have to have a fiduciary responsible. If you have something that I can't do better for, I will tell you that.
Good.
And it's really to assess that. And that's really, I would challenge everybody to have a second look at it. This is important. This is something you're going to always have in place, and to make sure that it's what you actually need.
And I know within our agency Elevated, and within our team, specifically Agency Elevated, we're not just offering just one company. We want to make sure that we have a variety of different carriers to be able to shop from, correct?
Absolutely.
Yeah. So that helps too, so that we can have a better gauge on comparison when it comes to these policies and the prices and the coverages. And because some of these things can really range from company to company, like you said, from term being some of the companies offer 5-year all the way up to 35 years. So we will leave, we always leave our information down in the description. If you're seeing this on Instagram, if you're seeing this on anywhere, because we're going to start sharing this, abroad, and reaching the masses, we'll always make sure we have our information there so that you can easily contact us. We always want to make this easy for people to be able to look into and, feel more proactive, and I want to say assured in what they have. And I just want to say too, something else that's really standing out for me right now, and I want to close and what I have to say here is, I feel a duty, and I feel personally really called to share more of this information on like the assessments, like more about the dime, more about the assessments. And so I imagine we're going to be recording more videos, and maybe we'll start putting them on YouTube and stuff like that, just so people can have a better understanding of the whole picture. So yeah, I'm excited to share.
Well, this is absolutely both of our passion to be able to share this stuff. And it's important because yes, we sell product, but more importantly, it's so many people out there in the marketplace that don't have the right insurance, don't have any insurance, and just need someone to give them a second look to see, what do they need, what can they afford, and what can they have in place. And, I always say this is the one thing that's inevitable. And we will spend thousands of dollars on insurance for things that we hope we never have. We hope we never have a car accident. We hope we never have our house burned. We'll spend thousands of dollars because somebody tells us we have to have it. Yet the one thing that we know we're all going to experience, which is death, we don't sit with a professional and really get evaluated to say, what do I need to have in place? Because it's going to happen.
Well, and too, if you have not listened to our episode before this one, where we talked about,
Final expense.
Final expense. Golly, these terms. When we talked about final expense insurance, where we were talking about end of life and how most people are really, really scared of that. So this isn't really a conversation that comes easily for people in their comfort zone to have when we talk about death. But I mean, I like the comfort that comes from it, of knowing that we have something in place, and the peace of mind is, I mean, that's unmatched. Like, to me, it's unmatched. It's worth 10 times of that peace of mind to be able to just get something like this in place. Okay. So anything else before we log off?
No, it's really hard to end any episode because I can get going with all of these subjects. But I don't know if we said it at the beginning, but especially if you have never seen our studio, make sure you're checking us out on Spotify. You have to turn your phone horizontally, I believe, so that you can see us on there. But if you're checking us out anywhere else, Pandora, Apple, any of the other channels, if you want to check us out on video, we're actually in our studio doing all of these episodes on Spotify. So we'd love to have you there. And again, as we say on every single episode, if you found something of value in this, share it with somebody else. If you're feeling like, hey, this brought something up inside of me, I need to get this reevaluated, reach out to us, reach out to any of us on our team. We can help you. If anything, at least go to where you currently have it and see if they can give you a better evaluation. So I will always ask for that, because this is just something so important for me. I always tell myself, I tell all the agents that I work with, the worst call you ever get is when a husband or a wife calls you and says, hey, did my husband or wife have life insurance? And you have to answer that call. You know what? I tried to, they never met with me, and unfortunately they don't.
And how many times have we seen that in 22 years? Unbelievable amount of times. It's true. It really, really does happen.
I've answered way too many of those calls.
It's horrible. It's horrible. Yeah. And sharing is caring. Again, sharing is caring. Sharing this information and this education with other people and your loved ones. Yeah. You never know. You never know. I mean, just like the story that we shared about a friend of your boss at the time. Yeah. Just pushing for them to get a life insurance policy. So, all right. Till next time. Thanks for being here, you guys.
Thanks.